Go to PVH CEO Manny Chirico, who joins us now for an exclusive interview. Manny, it's great to have you here, fresh off of those numbers. Clearly, you cut back a lot on expenses, which drove the profit. Tell us a little bit about what else you were going through, as I'm sure most of the stores where you supply your clothing were closed for a good chunk of the quarter.
Sure, exactly. During the quarter, our stores and our key customer stores were probably closed for basically a third of the quarter, a full month. So that's part of the decline. But despite that, when we initially talked about where we would be for this quarter, we talked about sales being down close to 50%. And actually, we significantly outperformed that revenue guidance and came in at down 33%. That's almost $300 million better than we anticipated. So really seeing some momentum in the business, particularly in our international markets. Europe for us is very strong. Our China business has really come back very strong. The toughest business we're having right now continues to be in the United States. We're outperforming our projections, but still well behind where we are in Asia and Europe.
How much of it is just the fact that department stores are in a world of hurt in the United States right now? We saw the Macy's numbers today. I didn't get a very clear, even picture of a recovery there, and we've seen so many bankruptcies in the space. How tied to that is the weakness you're projecting here in the U.S.?
Well, look, they're an important component of our business, but just to put it into perspective, North America department stores in 2019 represented about 12% of our total sales. And as we go forward, I think by the end of this year, that number will be closer to 8 to 9%. So they're important to us. They're great partners for us as we work together, but it's not as significant a component of the business as it was, let's say, 5 or 6 years ago. That said, they're starting to see some improvement in their business, and their online business, their .com business, the Macy's.com business, the Kohl's.com business has been very strong for us, as well as the pure plays that we sell like Amazon, Zalando, in Europe. So that portion of the business has been strong. But brick and mortar retail, particularly department stores, you've seen the numbers, they've been much more challenged given the pandemic.
When you look at the U.S. outlook for your business, Manny, how much does it rest for the rest of 2020 on whether there's more fiscal stimulus, or is that not as relevant perhaps as it seemed earlier in the year?
It's treacherous trying to project out and trying to understand all the moving parts in the business. Clearly, the response here in the United States from a fiscal point of view has been strong, but the response comparatively to the rest of the world as it relates to the pandemic and the control of that pandemic has been much weaker. So where there hasn't been as much fiscal support, let's say in Europe and in Asia, the fact that the pandemic is under much better control there, our business is that much more strong there. And we've been able to really capture back more and more of our sales. So I think it's really controlling the pandemic that's going to be the bigger issue for us going forward here in the States versus just throwing more stimulus at it. But given where we are, I don't in any way doubt that it's important to keep that stimulus going, and hopefully that can come through in the next few weeks.
Manny, what does the holiday season look like this year?
That's a great question. And if I had a crystal ball and knew the answer, I could make a lot of money. But let me tell you how we're approaching it. We're approaching it very cautiously and conservatively for a couple of reasons. We're well positioned if the consumer is there and we can sell, but we're also trying to position ourselves so we don't get caught with a significant amount of inventory. So actually projecting the business for the second half and in the fourth quarter to be down about 25%. If business is more robust, we're in an excellent position to capture that business. But if we're going to project out, we're going to take a more conservative posture. I think you have to consider a couple of things. I think the capacity issues at retail in stores, where we're trying to keep capacity of the store to 50% in those high traffic selling times of the year, like Christmas, that becomes more of a challenge for us as well. how comfortable is the consumer going to be coming to malls of any type, either outlet malls or even standalone retail stores? How comfortable are going to be coming back and shopping in those stores? I think there'll be activity, but I think traffic patterns probably will be under pressure, and store hours have also been curtailed. So where fourth quarter holiday tends to be an even bigger brick and mortar presence as a percentage of the business, I think that piece of the business will be under some degree of pressure because of the pandemic. I think the real opportunity will be online. We've made the investments to make sure we're in excellent position to capture that, both directly with our owned and operated sites that we do ourselves, and with our key partners, Macy's.com, Kohl's.com with our Amazon business, as well as Zalando and Tmall in Asia. Those are going to be key areas for us. So I think we're in a good position to outperform the sales guidance, but I still think you have to be somewhat cautious as you approach the fourth quarter.